Good afternoon, everybody. Welcome back to the channel. Hope you had a nice little break there. Markets closed yesterday and we ripped back open today as the markets pretty much climbed on Tuesday, which is today, alongside bonds, which is good. Markets definitely focusing in on prospects from Donald Trump's policies that are aiming to boost the outlook for the U.S. economy. Treasury yields approach their lowest levels of the year, with the 10-year as low as 4.5% from the recent highs of about 4.8%. This definitely also bodes well for stocks. And this is just an unwinding from recent surge driven in part by inflation concerns on tariff fears. The dollar gained a little bit to start things out, but it fell throughout the day, so that's also good. Small caps outperformed as the Russell 2000 pretty much led Wall Street with a more than 1.85% gain, while the breadth was strong at more than 3-to-1 advancers leading decliners, as all S&P sectors outside of energy finished higher. The Dow Jones climbed 1% despite a 4% drop in Apple, which continues to be pretty weak, but there was leadership in names such as 3M, and this was after their results and guidance boosted shares. But overall, stocks continue to build on big gains last week, where the S&P 500 staged a 2.9% gain, which is its biggest rally in 10 weeks. And, we closed on Friday, which was the highest close in the year so far to date, other than today, of course. But of particular note was the broadening under the surface of the rally, which we talked about last night with our prep session, and I do want to apologize again because I did record that session, but it did not capture my microphone, so that's a dirt move on my end. But like I said, we saw that the number of stocks trading above their key moving averages, such as the 200 here, we can see has now climbed to about 60%. So we continue to see that widening of that market breadth. And, today is actually the 6th consecutive day with more than 68% of the S&P 500 components moving higher. So that's pretty good. That is the longest streak ever, actually. One of the big non-stock stories was the winter storm moving over the southern states. So if you're in the Florida Panhandle, I got family down there. They are getting pounded by some snow, and the pictures are absolutely amazing. But back to the markets, though. The biggest thing coming out right now is Netflix earnings, and let me put this back on extended hours so we can see this on your right-hand side. Netflix pushing into fresh all-time highs, hitting at about the $990 level. This is the last time that Netflix is going to be reporting their subscriber numbers per quarter. So this is definitely a big one to pay attention to. It's also the first of the Mag 7 names to report, but it was a big double beat across the board. Revenues $10.25 billion. The estimate was $10.11 billion, up 16% year over year. Streaming net additions 18.91 million. That is also a beat. The estimate was only 9.18 million, so that is up 44% year over year. Incomes and margins all across the board just pretty much green. So Netflix absolutely blows it out of the park. You can see that we highlighted this area down here that, if Netflix broke below 815, then it was a pretty good short. But now neutral score though, and this is definitely going to be bullish at the opening, just blasting off almost to that 1,000 mark. So excellent report here to get things going for the Mag 7. Good stuff there. If we go over to Apple, I'm going to switch this back to get rid of 24 hours there. Apple continues to be a struggle. Remember, we lost 237.23. We've come down to the 220 mark. Came close to tapping that daily 200, and that's where I'm keeping a good close eye on, is this 220 mark and that daily 200 level. If we happen to break through this mark, then look out below, no doubt about that. As far as the main players here with the SPY, we can see that we had that nice little gap up today. A little bit weak to start things off, not gonna lie, but they held it and they pushed back up. In fact, you know, during the morning live session, we took QQQ puts to the downside, and that panned out pretty darn well. Now we're seeing we since then, especially during the afternoon session, pushed back on ahead. So the key levels remain the same. 602.20 was my first target to the upside. Now we're looking at 606 and prior all-time highs at about the 609 mark to pay attention to. And then, you know, if you're long, we still just want to pay attention to, you know, just kind of trailing your stop here and keeping a good eye on these key moving averages, such as the hourly 21. You can see that we are a little extended here, but nonetheless, this is a bullish market. But just kind of trail your stops from here as we progress on forward. You don't want to get caught on the wrong side of things, especially with things moving on higher. So I still want to err on the side of, you know, just be careful. Don't get too crazy. But it is still bullish. Nonetheless, we are in a pretty good environment here on the hourly. We did break out of this wedge. Nice daily squeeze trying to move up. This is bullish thrust. The only thing that's not correct is the positioning of the oscillator, but everything else aligns bullish here on the daily. So as we continue to push on higher, just trail stops, because just know that we are a little extended between the price action and the key moving averages. But as it sits, possibly any pullback could be bought, and as we try to push into new all-time highs. Let's check out the Qs. Qs continue to march forward as well, breaking out of its own wedge, and we still have targets to about that 528 mark, followed by 531, and then that definitely opens the door to about 537, and the new all-time highs at 539. Again, same story here. If we start to pull back, I want to see the hourly 200 hold as support, and this is actually the confluence of the 221. So I would want to see that to hold on as support. If we start to break down through there, then we could get a quick gap fill to about 515, and then our next level is 511, and then of course we got a gap to fill here at 505. So there's actually a lot of clean levels right now amongst the ETFs, such as the SPY and the Qs. So I definitely like that. Let's go take a peek real quick at the IWM and see where progress is, because the IWM and the Dow had a really good session today. We're still in a daily squeeze here as the small caps try to play a little bit of catch up here, and everything looks pretty decent. It says neutral with a -2 score. It's because it's neutral because, you know, moving averages aren't in the right position, the oscillators in the incorrect position, and we still have mid-level thrust. We don't quite have the strong level thrust. Price is still trying to wrestle with the 50-day simple moving average. We've bounced off the daily 200 after having a little bit of a top hat situation. And it looks like we are trying to approach 233, which is our first major supply zone overhead. So 233.5, that's where I want to pay attention to. If we happen to, I would probably imagine that we stall here at the daily 50 and then kind of ping pong a bit while the 21 catches up, and then we go up. That wouldn't be a surprise to me. But if we happen to break this 233, then we could easily, you know, climb up this ladder, because not much stern resistance was built up. This is all just momentum and profit taking at this point. So we'll see what happens from there. We did take a new position in AVGO, Broadcom, one of the best looking semiconductors out there, as it has a max bull score of 50 out of 50. Momentum looks good. We're in this daily squeeze. We have a new strong thrust signal, and there's really not much to really complain about. Looking for 250 and new all-time highs on Broadcom, so we're looking forward to that as we progress forward. But all in all, yeah, semiconductors look great. We are tapping back into that 262 zone, which was where we kind of bunked our head at the last time we were here. Was that NVIDIA CES event, and then we sold off. We held support at the daily 200. Now we're right back at pretty much the scene of the crime. So if semiconductors want to have continuation, we have to get above this 262 mark. All right, guys, that's going to be it for me. Hope you had a wonderful trading session. We'll be back at it again tomorrow, and stay cool. Or stay cool. It's easy to stay cool right now, especially if you're down here in the South, but stay warm and dry, and we will be keeping it going. All right, guys, take care. Bye-bye.